Happy Sat Stack and Saturday, and welcome to the #1 daily Bitcoin pod. In today's show, I'll be breaking down the latest Bitcoin technical analysis. We'll also be discussing an analyst warning that Bitcoin is at a risk of a further correction. I'll be breaking down his bottom target, as well as the spot Ethereum ETF launch has been delayed by the SEC comments. That's right, no launch likely on July 2nd. Womp womp. We'll also be discussing investment giant VanEck files for Solana exchange traded fund. That's right, a Solana ETF. It may be coming. We'll also be discussing Bitcoin price won't dramatically increase from here. According to billionaire Peter Thiel, Max Kaiser responded to this. Narcissism plus autism equals I should have bought more Bitcoin. That's why I sold some. We'll also be discussing BlackRock signaling a paradigm shift with an 84.9% Bitcoin allocation. That's right, with BlackRock allocating their optimal portfolio allocation into Bitcoin of 84.9%. According to their own research study released in 2022, that would send the Bitcoin price to $47 million per coin. I'll be breaking down the math for you. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show.
Oh my gosh, it's finally almost here. JV is going to talk to us. Crypto news is near. I can't stand waiting. There is no debating. I waited all day, maybe I need a life, but Bitcoin is all I can think about day and night. Hurry, JV.
Shout out to the crypto fam. Happy Sat Stack and Saturday. Let's get it. If you're new to the YouTube channel, please smash the likes, subscribe, and hit that bell icon to turn on all notifications, and repost this over on X. Today is pod episode number 1685. I'm your host, JV, and it's another beautiful Sat Stack and Saturday, June 29th, 2024, as we are entering the end of the month. Let me know where you feel the Bitcoin price action will likely close for the monthly candle. But without further ado, let's kick it off with our market watch. As we do each and every day, we got Bitcoin back in the green, baby, which I love to see. We're right at that $61,000 mark. Ether is back in the green, Solana in the green, while XRP, Cardano, and AVAX are correcting and in the red. And checking out coinmarketcap.com, we're currently sitting at Bitcoin dominance of 53.3%, with the Ether dominance at 18% even. The Bitcoin market cap sitting at $2.25 trillion. And checking out the top 100 crypto gainers for the past 24 hours, we got Mogcoin up 18%, WIF up 10%, and Arweave up 5%. Below that, Ordi, Litecoin, Quant, Cospa, and OKB. Which particular alts, fam, are y'all most bullish on for this particular bull? Holla. And checking out the crypto bubbles to get a visual perspective on the day. Unfortunately, the majority of the market is correcting and in the red, but Bitcoin's maintaining, doing its thing. But zooming out on the monthly to get a broader perspective, bloodshed across the crypto spheres. So be careful, Ishcoin and family. And checking out the crypto greed and fear index, we're all the way back down to a 30 in fear. Now this is good because the lower this number goes, and when we enter extreme fear, the more likely of a big pump, and vice versa. The higher the number this goes, the more likely of a big correction. Now yesterday was a 47, last week a 53, and last month a 73. Ingreed. So there you go, crypto bros. But without further ado, fam, let's dive into a little Bitcoin technical analysis, aka astrology for the broskies. Investors' risk appetite tends to increase with a lower cost of capital and higher liquidity, creating a favorable scenario for high growth assets. Consequently, Bitcoin and other cryptos benefit from such conditions, as more money in circulation typically boosts demand. However, if the US inflation appears to be under control, why isn't the crypto market reacting positively? Great question, right? The US Fed closely monitors the job market, inflation, and the value of the dollar to adjust its policies accordingly. And when inflation trends near the Fed's 2% target, it allows room for reducing interest rates and injecting liquidity by providing banks with the necessary capital, especially when the economy shows signs of weakness. This movement, known as expansionary, reduces incentives for the fixed income investments. The most recent figures from the Fed's preferred inflation indicator indicator revealed the deceleration in inflation for May. During this period, price increases registered their slowest growth since March 2021, marking the initial occurrence within the economic cycle that inflation surpassed the Fed's 2% target. The core PCE index, excluding food and energy costs, rose by 2.6% year over year in May, aligning with the predictions of the economists. But we all know they can fudge the numbers by looking at chosen metrics. I would dare say the inflation of the US dollar is probably like 20% per year. So they just want to pretend they have it under control. We got it under control. It's under 3%. But believe nothing these mofos say. I'm just saying. And earlier in the year, market traders anticipated at least 3 interest rate reductions. However, current projections adjusted to only 2, anticipated to commence in September. Seema Shah, chief global strategist at Principal Asset Management, told CNBC that a further declaration in inflation, ideally coupled with additional evidence of labor markets softening, will be necessary to pave the way for the first rate cut in September. Here you're looking at the gold, USD, and S&P 500. On your screen. The most recent U.S. inflation data, along with a 4% unemployment rate and a personal income growth, led the S&P 500 to reach an all-time high June 28th. Yet the total crypto market cap is down from its 2024 peak on March 14th. That's also when we hit the high of roughly 73,800, which is the current price discovery level. Every gold, typically considered a hedge asset, even gold, currently trading merely 5% below its all-time high from May 20th. Take that, Peter Shifty. Now, theoretically, crypto should benefit from the prospect of interest rate cuts and other expansionary measures due to their scarcity and non-censorable payment methods. However, the relative success of the Fed's strategy strengthens the U.S. dollar, which can be measured against a basket of foreign exchange rates using the DXY, which is the U.S. dollar currency index. A higher DXY means that the euro, the pound, and the Swiss franc are losing value. Here's one thing I know for sure, that the purchasing power of fiat is mathematically guaranteed to decrease, while the purchasing power of Bitcoin is mathematically guaranteed to continue to increase. Currently, the DXY is flirting with 106, the highest level since November of last year, and the US 5-year Treasury yield has decreased 4% from 4.72% April 25th. This indicates investors are relatively confident in the soft landing, where inflation decreases without an economic recession, and in this case, traders likely expect the stock market to continue reaching new highs without significant shock in the real estate market. This hypothesis, I love to just play with that word, this hypothesis explains why the lower inflation has not positively impacted the crypto market. However, there is still uncertainty about how the economy and the US dollar will behave if the Fed opts for an expansionary monetary policy. Therefore, a rally for Bitcoin and cryptos later in 2024 should not be rolled out. You're damn right, because it's most likely to rally. This is post-halving. Let's not get it twisted. Now let's check out some of the live charts. We'll start with the 1 hour, as you can see on your screen. Let me switch the scene so it's full screen for you. So here you go. We're looking live and in the flesh at the live charts right now. This is the 1 hour chart brought to you by TradingView via Coinbase, and you can see we're sitting, flirting with 61,000. We do have a target to the south here at 58,600. And again, this is the 1 hour chart. Let's zoom out. They say when in doubt, zoom out. Here's the 4 hour family. The 4 hour chart, a lot of action happening here. We have a big fat red target sitting all the way at 73.5, which would take us to the cusp of price discovery. We have a top 1 target and a top 2 target, both sitting at around 64,000. And we have a target to the south sitting just shy of $59,000. And that's the 4 hour chart family. Let's zoom out a little further. Let's check out the 1 day, then we'll do the 1 week and the 1 month. Here's the 1 day chart. You can see a lot of action Jackson occurring here. We got a big green target on a bullish pennant sitting at 106.2. 6 figures. Yes, please. And we also have a red target to the north as well, sitting at roughly 73,000. And then we have a couple of targets south of the current price action, one at 53.6 and one at 47.7. And it kind of looks very sideways here on the daily chart. And let's zoom out a little bit more and check out the weekly chart, live and in the flesh. Here we go. We do have a bullish pennant target here on the weekly chart. Weekly chart looking very bullish, in my humble opinion. The past 3 weeks have been little red candles, but I have a feeling we're going to be right back in bullish territory here in July. I want to know your thoughts on that. But anyways, the bullish pennant is sitting at roughly close to the 90,000 level. And we do have another target as well, another bullish pennant at $106,200, which I would love. And let's just check out one more on the monthly. Again, this is live and in the flesh, brought to you by TradingView via Coinbase. You can see here the monthly chart. We had a red candle most recent. Before that, we had a green and then a red. But before that, look at how many consecutive green candles we had for that staircase. 1, 2, 3, 4, 5, 6, 7. Then we had that little bit of itty bitty red candle, itty bitty green candle, itty bitty red candle. Past few months have been a little boring, but nonetheless, let's not forget we've come so long. Yeah, I mean, we've come a far ways since where we were at the start of last year, even the start of this year. So there you have it, my crypto fam. Now let's check out a Bitcoin bottom target as per Analyst Rec Capital. This headline reads, Crypto Analyst warns that Bitcoin is at risk of further correction. And I'll break down his target. So yeah, the crypto strategist who nailed the pre-halving pullback for the biddies warns that Bitcoin can correct much lower levels. The analyst known as Rect Capital, what a great name, says Bitcoin can drop more than 8% from the current value. Quoting the analyst here, what if we were going to see the deepest correction in the cycle, or at least equal to the deepest correction in the cycle of 23.8%? That would see us go to $55,000 as outlined right here in the chart. Now, hypothetically, if we hit that bottom target, how many of you would seize that opportunity? Let me know, BTFG. However, the analyst believes that a deeper drawdown is unlikely at this point of the cycle. Rec Capital says it is more likely that either BTC has just put in the local bottom or Bitcoin is witnessing a more shallow pullback. That's right, quoting him again. Is that a possibility that we see the deepest correction not too long after already seeing the deepest correction this cycle, just after the halving? So that was around late April, early May. We saw a record-breaking deep correction in this cycle. We eclipsed the early 2023 pullback, and it took a year and a half for that new record to come in. So to now talk about another record and another deep retrace occurring only a month and a half later, I think that's a little bit too far-fetched. I don't think we are going to eclipse that retrace depth for the deepest retrace in this cycle. I think it would be either this being the bottom already or a slightly additional pullback. Let me know your thoughts on the analyst's sentiment, and let me know, do you think the bottom is in? I think we touched in the 58 range. It was 58 and some change. Safe to say around 58.5. Let me know if you feel that was the bottom, or do you think we'll likely correct even further? Holla. Let's discuss this. Ethereum ETF is allegedly being delayed. We were originally anticipating it to go live July 2nd, according to the Bloomberg ETF Analyst, but now there is an update apparently from the SEC. Headline reads, Spot Ethereum ETF launch delayed by the SEC comments. That's right. The launch of the U.S. Spot Ether ETF, which many expected to occur as early as July 2nd, which would have been in a few days, I guess Monday, right? Has been delayed by the SEC, according to Bloomberg ETF analysts Balchunas and Safart. The SEC has taken additional time to return the S1 form submitted by prospective Spot Ether ETF issuers, pushing the launch to mid-July. Maybe even later, family. The SEC commented on the S1 forms and requested resubmissions by July 8th. And according to Balchunas, this new timeline means the launch of the Spot Ether ETFs could be postponed until mid to late July. ETF store president Nate Gerasi noted that the last round of the S1 revisions were relatively minor, predicting the SEC would clear issuers for trading within 14 to 21 days. That gives us 2 to 3 weeks, fam. And although the exact timeline remains uncertain because we're dealing with no Claire Gare, the SEC has indicated a potential launch this summer, quoting Balchunas. Unfortunately, think we're going to have to push back our over-under till after the holiday, referring to Independence Day. Sounds like the SEC took extra time to get back to the people this week. Algorithm, again, very light tweaks. And from what I hear, next week is dead because of the holiday, equals July 8th. The process resumes, yada, yada, yada. Now, the approval of the S1 forms is the second part of the two-step process required for the ETFs to go live. The first part involved the approval of the issuers' 19B4 forms in May. The SEC approved 19B4 filings from 8 of the ETF bidders May 23rd. And unlike the 19B4 forms, the S1 forms are not bound to a specific deadline. leaving issuers reliant on the SEC timeline for review and approval. Now, No Claire Gare on June 26 confirmed that the approval process for the spot Ether ETFs is progressing smoothly, just like his bald head. The SEC approved the rule change, allowing major issuers, including BlackRock, Fidelity, 21 Shares, Grayscale, Franklin Templeton, VanEck, iShares, and Invesco to participate in the process. Additionally, issuers such as VanEck filed 8-8 forms preparing for the listing. Exchanges, July 8th, 8-8. Another sacred omen there, family. However, Gensler claimed that the listing spot Ether ETFs on the stock exchanges could take months and may not happen until September. Gensler puts the onus of the Ether ETF listings on the applicants and claimed the process depends entirely on their response times. So again, Gensler taking no responsibility and just blaming it all on the issuers for the delay. Go figure. Not surprised. But anyways, fam, let me know. Are any of you actually excited for the anticipation of the Ether ETF? Do you think it'll launch sometime in July? Or do you think it may get postponed yet again? It's interesting. But talking of ETFs, there's big news with Solana ETF, which we're going to dive into our next story. Welcome everyone just joining us. The headline reads, investment giant VanEck, one of the large asset managers, files for a Solana ETF, triggering modest price jump for Solana. Solana jumped like 7% yesterday. That was because of this news. So let me read it to you, family. Investment giant VanEck is seeking approval for a spot Solana ETF. According to a new filing with the US SEC, the company submitted the S1 registration statement to the securities regulator on Thursday related to the SOL ETF, which will be called the VanEck Solana Trust. VanEck, who is the first company in the US to file for a Solana ETF, says it would be listed on the CBOE BZX exchange if ultimately approved by the SEC. So the million-dollar question becomes, will it get approved by the SEC? Clearly, Ethereum is next to get that approval, but let me know your thoughts. After the filing, Solana's price shot up. Well, I guess I take that back. Ether already got the approval from the SEC, but we're not going to launch until 2 to 3 weeks as per the story I just read to you. But anyways, Solana price shot up from a 24-hour low of $130 to a 24-hour high of $150, more of a 15% gain off the back of that news. The SEC approved spot Bitcoin ETFs earlier this year, which launched officially. That was January 11th, and indicated the spot Ether ETFs will be approved very soon, as I already shared with you from Eric Balchunas and the rest of them. So also, Trump prevails as president over Biden in November's election. The application would likely get approved, according to the Analyst. Trump is perceived as being more supportive of digital assets than Biden. In fact, Biden despises all of cryptocurrency. He makes that very clear with people like Senator Warren, Gary Gensler, and the rest of these mofos. Quoting him here, the knee-jerk reaction here is, oh, they will never be approved because they aren't Solana futures. Agree. But if there is a change at POTUS, I think anything is possible. Just imagine Commissioner of the SEC Hester Pierce, crypto mom, let's go, or someone like that running the SEC. Yeah, we need to get rid of that No Claire Gare because he's just a stooge for Biden and Biden's puppet masters. Just saying. I see this filing as a call option on the POTUS election. I don't blame them for trying this. Why not? So there you go, yo. How many of you are excited for Solana ETF? Do you think that will likely get the approval? If so, by when? Holla. Now the latest from billionaire Peter Thiel. It wasn't too long ago. He gave a speech at Bitcoin Miami, extremely bullish on Bitcoin. Well, he's changed his tune, and I find this very interesting, so we're going to read it. But before I even get into it, this was Max Kaiser's response. Narcissism plus autism equals, I should have bought more Bitcoin, but that's why I've sold some. Dun dun. Crazy, right? But anyways, check it. Former PayPal CEO Peter Thiel expressed doubts about the potential for the Bitcoin price to increase significantly from its current levels. The billionaire, who says he still owns some bitties, but does not have as much as he should have, isn't sure where the next batch of buyers will come from. Now that Bitcoin has had its ETF edition, quoting him here from the interview, I'm not sure it's going to go up that dramatically from here. We got the ETF edition, and I don't know who else buys it, he shared. It'll probably still can go up, but it is going to be volatile, bumpy ride. Well, of course, volatile equals life force, just saying. And he was stuttering the entire time speaking about it. It was very interesting. I think that's why Max referenced his autism. Thiel previously said he was underinvested in Bitcoin in October of 2021 when crypto was rallying towards its previous all-time high. That's right, of 69,000, which was set 3 weeks later. However, Thiel's Founders Fund has a rather impressive history with Bitcoin, having made its first Bitcoin investment all the way back in 2014, profiting $1.8 billion shortly before the market collapsed in 2022. That's right, they sold off, or at least Thiel and his fund, the majority of the Bitcoin before it did collapse. So they made a massive $1.8 billion profit. Founders Fund then bought another $100 million in Bitcoin in 2023 when it was trading below 30. Talk about BTFD, buy that freaking dip. Thiel revealed that Bitcoin hasn't turned out as cypherpunk as he originally envisioned, quoting him again from the interview. Where I am less convinced is this question of the ideological founding vision of Bitcoin as a cypherpunk crypto anarchist. Hopefully I'm pronouncing that right. Libertarian, anti-centralized government thing. That's what I thought was terrific about it. He recalled the first time coming across Bitcoin, but now he believes Bitcoin doesn't really work that way. When people in the FBI tell me that they'd much rather have criminals use Bitcoin than $100 bills, it suggests that maybe it's not quite working the way it was supposed to. However, Bitcoin was designed to be a public, permissionless, and decentralized ledger, and transactions weren't intended to be completely untraceable like Monero and other privacy-focused networks. Facts. That's 100%. So there you have it. I mean, let me know your thoughts on Peter Thiel ultimately saying he doesn't believe in Bitcoin. He also referenced something in the interview because I watched it. He says BlackRock is ultimately manipulating it, and so therefore he don't trust it. I don't trust BlackRock either, so he does make a point there, and there's definitely always manipulation going on. But at the end of the day, I mean, the man profited $1.8 billion from his Bitcoin fund. He still owns Bitcoin. Maybe he's not as bullish as he once was, but he knows what's up. Now for our feature story of the day. BlackRock signals a paradigm shift with an 84.9% allocation recommendation for the King crypto. And I'm going to be breaking down the math, which signifies we can hit a $47 million Bitcoin price if the major asset managers follow the recommendation of BlackRock. So check it out, as you can see here in the headline. But I'm actually going to start here. There's a tweet I made a little while back with BlackRock allocating their optimal portfolio allocation into Bitcoin of 84.9%, according to their very own study released in 2022. That will send the Bitcoin price action to $47 million per coin. And quoting Samson Mao, the math checks out. Bitcoin is going to 47 million per biddy. Now let's break down the math from Macronaut BTC. Shout out to the Macronaut. BlackRock, and this was at that time, had less than what they have now. FYI, at that time, they had 9.4 trillion in assets under management. 9.4. 0.849 for the right Bitcoin position percentage equals 7.98 trillion. And BlackRock will need to allocate to Bitcoin to follow their paper. 7.98, 118B of a multiplier equals $941 trillion market cap. So Bitcoin will be about $47 million per coin. So there you go. But let's dive deeper into this article, family, now that I shared some of that with you. In a significant departure from traditional stance and cautiousness towards cryptos, BlackRock, the world's largest asset manager with roughly 10 trillion in assets under management, they did a research paper titled Asset Allocation with Crypto, Application of Preferences for Positive Skewness, suggesting Bitcoin should make up a substantial 84.9% of an investment portfolio consisting of 60% equities and 40% bonds. Let's go. The BlackRock researchers conducted an in-depth analysis of Bitcoin performance and returns, and during this period, they found that Bitcoin exhibited considerable volatility with an annual rate of 132%. Now, here's the actual tweet I wanted to read to you. It says, last summer, BlackRock put out a paper stating starting with a 60/40 equity bond portfolio, the optimal Bitcoin allocation is a large 84.9%. But let's read it directly from the horse's mouth coming from BlackRock. I'm going to read this to you. We perform the following asset allocation exercise. Suppose we start with a 60/40 equity bond portfolio. Assuming the equity and the bond returns are log normal, fitted to the moments reported in the data of Exhibit 1, we compute the power utility risk aversion coefficient to yield a 60/40 allocation. In this case, a risk aversion of Y equals 1.5 corresponds to the 60/40. Then we hold the risk aversion fixed and the estimate with the optimal weight of Bitcoin. And assuming that the equity and bond weights are held at the same prorate 60-40 allocation. That is, the equity and the bond weights are set to be whatever that math I can't read because I'm not a math whiz. We use the mixture of normals distribution for Bitcoin returns that captures large positive skewness. Now for the highlighted section, which is highlighted in the yellow. Exhibit 4 presents the results, starting with a 60-40 equity bond portfolio, which is produced with a risk aversion of Y equals 1.5. The optimal Bitcoin allocation is a large 84.9%. The remainder of the portfolio, 15.1%, is split 60-40 between equities and bonds. Now for the green highlighted section, pay close attention to this part. Although Bitcoin has an extremely large volatility of 1.322, the pronounced positive skewness leads to large allocations and dominates in the utility function. And now I'm continuing. The certainty equivalent compensation required to not invest into Bitcoin is close to 200%. Whoa, if Exhibit 4, starting with a 2080 stock bond portfolio, leads to 12.5% Bitcoin allocation, and a risk-tolerant investor with an 80-20 stock bond portfolio desires a levered position in Bitcoin of 106%. So what would happen with a levered position? That's how you can get to 200%. Mind-boggling. The possibilities are endless, family, but continuing on with the story. What sets Bitcoin apart is its positive skewness, as referenced in their report, when expressed in terms of continuously compounded returns. And in contrast to this, equity returns showed a percentage of negative 0.43%, while bond returns were at 0.01%. Jesus. Bitcoin's third central moment of returns was an astonishing 144% annually, demonstrating a stark contrast to traditional equities and bonds. This unique characteristic of Bitcoin's return make it an appealing asset for investors seeking substantial gains. Stack the biddies, fam. The research also highlighted Bitcoin's consistent propensity for significant gains. While returns often follow standard patterns, there are exceptional periods labeled as bliss regime, during which Bitcoin prices soar over 100 times annually. This level of return potential is what attracts the investors aiming for substantial profits. And even when Bitcoin is expected to depreciate in the standard scenario, the research noted investors focus on maximizing profits tend to allocate 3% into Bitcoin. This allocation remains consistent even when there's only a 1% chance of a highly profitable scenario materializing. Now, BlackRock's recommendation to allocate a substantial almost 85% of Bitcoin in a 60-40 equity bond portfolio marks a significant departure from the conservative approach traditionally taken by many financial institutions towards crypto. It underscores the growing acceptance and recognition of Bitcoin as a legitimate asset class that can offer substantial returns. The move by BlackRock follows the US SEC's clearance of the ETFs, which officially went live for the Bitcoin spot back in January of this year. But I want to know your thoughts surrounding some of this math. Do you believe Bitcoin will likely hit 47 if it theoretically had that level of allocation as shared here by Samson Mowen via BlackRock's own report? Now let's just keep it 100. Most likely, if we were to see this level of asset allocation, it could take a decade, it could take 2-3 decades, I don't know, but that's a lot. But hypothetically speaking, what if it was just 5%? We're talking about a multiple $1 million Bitcoin price action. I feel 5% is very conservative. Here's how I feel the plot will go. I think asset managers will start very conservatively, as they kind of already are, maybe 1%, 2%, 3% allocation. They're going to see the returns fantastic, especially post-halving when we're about to go parabolic, hit a new cycle peak, potentially add a 0 to that price action you see in your screen. Then the following year, they're going to be like, okay, 2% was great. We're seeing all these returns from our 2% allocation. All of our other investments not doing so well. So let's go from 2% to 4%, 4%, from 8%, 8%, 16%, 16%, 32%, 32%, 64%. You know what I mean? You starting to feel my vibe? And before you know it, they may have an insane allocation into the king. But let me know your thoughts, family, and welcome to the Q&A segment of the live show. JV streaming live and in the flesh. I'm going to read as many of your comments out loud as I can. Let's go. I feel sorry for all those that sell at 100K because I will be buying along with all the institutions. Amen, Molly. You're smart. Number 1, Bitcoin ASAP. Amen. Crypto made. Bitcoin will go below 50 before breaking all-time high. For real this time. The break was a liquidity grab, not true value. 47 cents a sat at 47 million. Send it. And $1 a sat would take us to 100 million Bitcoin price. Jack Mullers is a part of the crypto hoodie gang. Hodl gang, hoodie gang. 50 million, 20 years out minimum. Nobody on earth reads the crypto news like JV. He's just the best. Thank you, Molly. I'm humbled.